think I will get started. We've given a couple of minutes for people to join, but I think we should get started. Very good morning to everybody that's joined this webinar. It's good to see so many people spending an hour with us to go through a very interesting topic on implementing AML and CFT solutions, compliance solutions effectively. I think one of the best things about this particular topic is that it really touches on the key points around how do you implement an effective AML and fraud rule solution. But before I get into the conversation, my name is Dixtior DCS. I'm the MD for Travasa Solutions Limited. I have with me on this webinar, I've got Emmanuel Williams, who's an enterprise architect at Travasa, and I'm also here with the CEO of Dixtior, Huey Vicente. Emmanuel and Huey are going to basically describe how to implement effective AML and CFT fraud rules. My role is to introduce as much of the topic as possible, but also get some of the feedback from you. So as much as possible, we would like you to spend the time listening to us, but also ask us questions. There is a section on the question and answers that you can feel free to type in your questions. And as much as possible, we also want to demonstrate some capabilities of the Dixtior solution when we get to a point on the whole webinar. Now, just to kind of give you some context, we are going to spend just 1 hour on this webinar. As much as possible, that 1 hour, we want to break it down into a set of blocks. So I will spend 5 minutes describing the AML CFT and effectiveness. I will then hand over to Emmanuel, who will spend 15 minutes describing further the capabilities around that, and then I will then hand over as well to Huey, who will further describe the Dixtior solution. Travasa as a company has been helping companies in Nigeria and beyond Nigeria on implementing AML and fraud solutions. We've partnered with Dixtior to effectively deliver the solution in the market in Nigeria and beyond. And we welcome your engagement with us down the line should you wish to find a bit more about the Dixtior solutions or how Travasa can assist you in implementing effective AML and fraud solutions. So let's get started. I think one of the things that I really like about AML, or when I say like, is really the capabilities around it, is that it really touches on a number of things for a business. It really helps the business to stay compliant. And there are mechanisms over the years that have been implemented to make sure that when a financial institution implements an AML solution, they have the right capabilities for that to happen. So currently, what most organizations do is that they have most financial organizations, they have a compliance unit who then define the compliance processes based on the legislation, which is being driven by FATF, but also work very closely with the financial intelligence unit. So nationally, most countries have a financial intelligence unit. They make and that financial intelligence unit's responsibility is to effectively identify fraud patterns and share that insight with those financial institutions in the country. So logic, what typically happens is that most organizations leverage these 4 unit blocks. So they have the financial crime patterns in which they effectively build rules against. They leverage insight from financial intelligence units of the country. They provide reports to those countries. And they also integrate with third-party systems for data verification, matching, and logging. So that includes systems to allow them to effectively validate, that the identity of individuals, sanctions list, and so on and so forth. So currently, what we have is very much a siloed solution, monolithic in the sense that most financial institutions implement a solution and they effectively get some data from third parties, but they don't actually have a fully automated solution that helps them to really prevent fraud. So they do more detection and they get limited results on that because sometimes they generate false alerts and so on and so forth. But we believe there's a way forward. Looking at where we are now, we're now in 2021, things have changed. There's a lot of involvement in the types of fraud that we're seeing. So the patterns of fraud are also improving and increasing. So next one, please, Manu. Manu, click on it.
Yeah, so you want to mention the poll that we have?
Oh, yes. Okay. Yes. So, yes, there is a poll that we would like you to participate in. Please do attempt that poll as much as possible. We will give the results of that poll at the end of the webinar. So please do so, and we will share the results at the end. Thank you. Now, just carrying on then, but where we are currently is, as I said, is that most implementations are monolithic in nature, as in a financial institution implements a system and leverages data from very limited sources. So the outcome of the anti-money laundering checks or reduction in money laundering is usually limited in results. So, and that's really a position we need to move away from. We need to move away from it for a number of reasons. The fact that even the landscape in which we are conducting anti-money laundering is also changing very effectively. If you take money is no longer just cash or financial transactions in a bank. We're now talking about digital currencies in place. So anti-money laundering needs to stretch to cover those kind of scenarios. Threats are also increasing, not just from the layering of the old days to new threats that are coming from new payment service providers, from new mechanisms in which people can actually open accounts. So threats are increasing, so the AML solutions needs to evolve. Identity also is evolved. So rather than just saying, yes, I'm a bank customer, your identity on a social media platform in which you're leveraging certain interactions could be different. So there needs to be new ways of looking at how we tackle anti-money laundering. So those evolving threats, evolving landscape means that we need to be very careful on how we implement AML solutions that will drive the agenda we want, which is effectively prevent fraud and prevent anti-money laundering and fraud scenarios in the first place. Next please, Emmanuel. Now, what does the future look like? Thank you. Can you click on it? Thank you. Yeah, what does the future look like, really? What we are recommending to customers, which we're going to talk a little bit more on this webinar, is a more integrated world around anti-money laundering solutions. So solutions now should be evolving because financial instruments are also evolving. Financial institutions are evolving. If you take what I have on this slide, where financial institutions may have a digital footprint, may have a fintech solution as part of its ecosystem, may also be standing up new payment service engines towards meeting its business obligations. So the whole identity of creating an anti-money laundering solution needs to change. It needs to change to be more kind of what we're calling a centralized platform. It's a shared platform. Rather than just using separate solutions for how you do anti-money laundering, you should be looking at a centralized solution that takes care of your entire banking ecosystem, or takes care of the relationships you have across your entire banking ecosystem. So that's what we've depicted here. And also there needs to be involvement around the financial intelligence unit. So nationally, there's a financial intelligence unit. Data needs to be more shared around that. Real-time intelligence needs to be more accessible. So you need solutions that effectively enable you to effectively build better coexistence with financial intelligence units. Third-party data needs to also evolve. You're not just getting data towards validating the identity of an individual. You should be supplying data back to those data points. And you need to be looking at systems that allows you to build that new ecosystems that are effective towards tackling the kind of evolving threats that we face out there. So I think that's just a context. I just want to set a very brief context on what we'll be covering. I want to now invite Emmanuel Williamson to basically take over and basically take it further and describe how we can get deliver an effective AML and fraud solution. So Emmanuel, over to you.
Thank you very much, Jide. Thank you everyone for being part of this webinar. I hope you will find it most productive. Now, as Jide has probably given us a very good background, we know that quite a number of things have changed, especially since September 11. And given the changes that we've, the more stringent concerns around AML and CFT, we now know that AML and compliance has become mandatory. But at the same time, there are other concerns as well. I know that quite a number of us here, this webinar was meant to be directed to microfinance institutions as well as fintechs, PSBs, and what have you. And we know that a lot of the products or institutions were also meant to be directed to ensure that while we are protecting the peace, we are also fitting the poor. So if we are introducing AML solutions, we're introducing CFT solutions, we still want to ensure that the business objectives are met. So I'll be talking basically about what's the difference between money laundering and financing of terrorism. I mean, why are we treating them the same way? even though they seem to be two different things. What's the risk landscape like? And what are the global and local requirements for regulatory compliance? Rui, we attend a lot more to the challenges for MFIs and fintechs, and then we'll also talk about doing it the Dixtior way. So financing terrorism and money laundering are actually two different things, but they all actually apply the same techniques. Financing of terrorism basically revolves around legitimate assets or funds or assets from funds from criminal, basically funds from criminal acts being polished and then being, should I say, legitimized, basically. And the techniques that they both use really basically revolves around placement. So you put them into, deposit them into the financial system, the legitimate or traditional financial systems, that is state banks, commercial banks, postal banks, PSBs, and what have you, and even fintechs now, securities and what have you. And then layering basically funds to other institutions to obscure or their origin. Then, I mean, we loan this money out or we use this money for investments and what have you. And then basically the money becomes legitimized. And then of course it becomes integrated back into whatever the main objectives for the people actually carrying out these acts. Now, this is an evolving environment, like Jide has really said. Yeah, so the placement method, the layering method, and the method being used for integration is actually changing. The whole risk landscape is also changing, especially for MFIs, PSBs, and fintechs. Traditionally, I mean, we have looked at this environment as basically low risk environment because of the level of transactions that would usually be, the transaction limits that would usually take place in this environment. I mean, if you look at the MFIs, you're basically looking at things like microloans and micro savings and what have you. PSBs engage in transfers and remittances. So also the mobile money operators. And then of course the fintechs come in with e-wallets, savings account, different forms of investments that they allow. Of course, with this new, with this environment, there are opportunities and also there are threats. The key opportunities there is that basically you have a low tier KYC requirements, financial inclusion products for low earners, low income earners, low risk rating due to small size of transactions. But of course, you have over 3 billion unbanked people that the market really wants to exploit. For the fintechs, and I know we have quite a number of them on this call, I mean, because of the small amount of transaction limits that would usually take place within this environment, it is, to a certain extent, it was considered low risk originally. But of course, you also provide the speed of account opening, you enable inter-border transactions. And like we have also said, we are talking about virtual assets, cryptocurrency and what have you. Yeah, so with the changing, I mean, with these opportunities also come threats. In that for the microfinance institutions, for instance, we do now have the opportunity for people to actually invest their monies in these institutions as shareholders, ill-gotten money, of course, either through bribery or corruption or what have you. And then we also have the account moves. I think this also applies almost practically in all the environment we're talking about today, whereby you open small accounts and that money are transferred into, and then through that, we actually can actually sponsor illicit activities, especially terrorism. Of course, one of the things that was discovered, I mean, that has been discovered is that while the amount of money that is being laundered annually, I mean, can go to between 800 billion to over $2 trillion annually. Yes, that tells us the magnitude of the money we are talking about, which is about 2 to 5% of the global GDP. But the actual money that is used to sponsor a particular act of terrorism could be as low as $6,000. And I mean, in our own environment, we could be talking about as low as maybe about $50,000 or $100,000 in terms of a particular transfer. And so that the actual amount of money being transferred at a particular point in time is really very small. Those monies are not moved at a large amount at the same time. So we actually find that these criminals can actually take advantage of the low risk tier in this environment, MFIs, PSVs, mobile money operators, and also the fintechs, to actually move around their money to actually compromise our financial systems. And it's really very important for us to ensure that our financial systems are stabilized against this particular threats. Of course, to ensure this happens, FATF, CBN, NFIU, all working together, basically, at least to ensure that 4 things happen. One, we want to ensure that there is enhancement of our internal controls to cater specifically for AML and CFT risk, implementation of customer due diligence procedures on all new and existing clients, introduction of heightened surveillance of suspicious transactions and keep transaction records for future verification, and of course, reporting of suspicious transactions to the NFIU. While doing this, of course, each of us will be concerned about our organization's reputation, our integrity, the strategic objectives in terms of the markets we really want to tackle, the markets we are trying to gain. Our operational processes, we want to ensure that our cost remains low so that our products can remain attractive. Those are still concerns for us while trying to achieve this. Really, what we are talking about is, one, putting policies in place, training our personnel and compliance professionals, while at the same time applying risk-based rules and watch list management. So we're talking about how do you achieve KYC, doing risk-based assessment for your KYC, your KYT, and your compliance due diligence, the PEPs and the sign list that you would need to manage. And of course, you will be concerned about the technology that will support this particular infrastructure or these processes you want to actually put in place. So, of course, you want to ensure that the technology you're applying or the infrastructure you are deploying do not become too expensive, or you will really be concerned about that. Which, of course, the latest technology around cloud infrastructure and what have you actually creates opportunities for us to go beyond the on-premise solutions, which might be actually difficult to maintain, because then you'll be looking at not just the technology, the solutions themselves, but the people you have to train to manage that environment. Of course, there is the reporting capability that you want to have in place. The NFIU requires currency and suspicious transaction reporting on a regular basis. And of course, in this environment, a lot of that, of course, this is done differently in different regions, but the way NFIU has done their own integration, a lot of the way they've done the integration actually requires you to also look at how you're going to integrate with other third-party applications, especially when you're considering your technology. All this while having in mind your major concerns around strategy, costs, your integrity as an organization, your reputation, and your operational processes. So what are the challenges? We know that we can look at the challenges from at least 3 different perspectives. Brew will talk a lot more on this, but we're looking at, the evolution of the banking environment or the financial institution environment as a whole, not just banks now, because we also know that we have the non-banks financial institutions. You're looking at the compliance landscape because the regulations keeps changing almost every year, if not every month. They come up with new regulations. And the way the money laundering and financing of terrorism is actually carried out, it keeps changing as well, because they keep looking for smarter means of compromising the system or looking at taking advantage of the loopholes that we have within the system. Of course, you also want to manage your compliance costs, all that from an enterprise point of view. And then you look at the practitioners themselves. There are also rules and definition maintenance, false positives and reporting. How do you manage false positives? And those are things you will really be concerned about in whatever solutions you're deploying. Of course, you will also be concerned about your systems. Jide has talked about monolithic systems in the past. We also have siloed solutions. You have your AML solution in one place, your fraud system in one place, and in another place, and all that. And the complexity of the delivery, the integration challenges, and the support, which are also major concerns for us. So all these things really, calls into question how we are currently doing things now and how do we improve this and going forward. I mean, the target for us is to actually have an integrated system, both processes, human activity, and technology, both at the internal level and at the external engagement with regulatory bodies and other regulated entities. How do we ensure that we have a holistic flow from the regulators down to the customers themselves, and taking advantage of all the latest technology that we have around us? Really, we're looking for solutions that are well aligned and that ensures that we actually have a seamless delivery of compliance, while at the same time ensuring that the customer targets are satisfied. So basically, we need to manage the evolving risk. We also need to manage evolving regulations to ensure that while we are compliant, we are also able to actually deliver the value to the customers. Thank you, Jide.
Thank you, Manu, for that. It's been very exciting just listening to you once again on this topic. I think one of the things that I take in from this, and I hope I can get it as clearly as possible to people, is that, you know, when you're looking to put in place a solution, the thought process needs to be different going forward. Historically, we've always been saying, yep, you put an AML solution in place, you plug in all your data points, you put your rules in the system, and off you go, you have a system. No, that's not the way forward. You need to look at systems now very differently. You need to look at systems in the sense that you need to be thinking about all those, your evolving landscape. Money is changing, you know, the whole threat levels are changing, identity is changing, data is also evolving. Things have to be more joined up. Don't just rely on the guidelines being given to you by the NFIU or by the FATF. You need to also have systems that effectively can exchange data and learn from and benefit from new data points or new innovative techniques such as machine learning, artificial intelligence, analytics. Those are mechanisms that needs to be in place now in any solution that you have that you're looking to deploy going forward. Now, I just want to now invite Hiri Ikante back onto this, basically to describe to us. He is CEO for Dixtior. He's going to take us a little bit further into the topic. Thank you. Hiri, over to you.
Thank you, Jai. Thank you, Emmanuel, for your wonderful presentation. Today, I want to focus my presentation in what new payment methods are and the way that they are used by fintechs and payment services, inclusive microcredit companies that have to present new services to their customers, but in the perspective of how a solution for AML or fraud should be looking at the problems, at the risks that these new payment methods bring. So payment methods basically are payment innovations that have been done and developed for the last 4 years. And we can see on payments on mobile phones, payments in computers, without cards, everything being used, and also giving a lot of free of burden of going to a bank and having a traditional bank and having a lot of trouble to do the transactions that we wanted to do. So basically, these new payment methods developed basically because of the need of being more faster, less bureaucratic, but also with the intention to improve the capability of banking people in countries where banking it's not that easy. Another thing that it was intended in these payments, new payment methods, it's trying to decrease the number of cash-based transactions. So in putting more methods, in putting more ways of you to perform your daily transactions, so it's easier to move away from pure cash. As we can see on payment services, on these new payment methods, in online payments, we have the home banking that everybody uses now. Card not present, like you have a phone, you have the card on the phone, you don't have a physical card. You have virtual cards, you have online wallets. Everybody talks now about virtual wallets, online wallets for cryptocurrency and things like that. But you can also have it for the traditional money, if you want to call it like that. And you have third-party payments. In mobile payments, you have payments by SMS. Can you go back, please, just one slide? Thank you. You have direct mobile billing, mobile apps, mobile wallets, and also third-party payments. We will focus on mobile payments and mobile money in another webinar that we will have soon. But going back to these online payments and to these online services that these new companies are bringing, the payment services, well, you have to manage with a lot of things. You have to manage with merchants, you manage with clients, and as Emmanuel said, there's a lot of legislation, and Jai also referred that legislation coming, I would say, Jai, every single day, not every week. I think that legislation comes in a daily basis, but problems also arise daily, and new threats arise daily. You can change the slide now, please. The rising number of transactions and the volume of funds moved through these new payment methods since 2006, it was accompanied by an increased number of threats. It's true that payment services and these new payment methods allow a better control because we keep a lot of records that we'll see ahead on this presentation. It also brings the question of not being present, the anonymity of the person that really makes these transactions. So please change the slide. So let's first go to some risks and compare it by cash and new payment methods with high risk and with low risk. So in terms of diligence, identification, verification, if it's a cash-based trade, it's anonymous. Basically, it's in front of you, but you don't check anything. But if you do the same thing, if you cannot identify, if you cannot verify identification, so it's a payment method with high risk. And in here you can see the difference. For example, it can be me buying a virtual card, but then I can give Emmanuel to use it. So even the identification, it's possible to be done, but then we are not assured if the same person is using it. In the other hand, you have customers that are really identified, and the customer identity is verified in a reliable basis and on time going. So monitoring is also possible only with these new pay methods are of low risk. But you have more value limits in cash. Of course, you have no limits. High risk new payment methods, they have no risk. But of course, when you use these new payment methods, we all know the organization, the company that provides the services tries to put amounts of limits for number of transactions, for the amounts, the amounts to be used, the top amount that can be used, in how many time it needs to be for you to do a second transaction. All these should be ensured to work. Also, the funding. The funding, it's also in cash. It's not available, of course, but in high risk new payment factors. So these anonymous funding sources that you can move money from one side to the other, and sometimes you don't know where the money is coming from and where it comes from. You can change the slide, please. Geographical limits. Some currencies, as you know, are more accepted more widely than others. With new payments methods, the same thing happens. They can be restricted to a geography. They can be accepted in some parts of the geography. But if you have cross-border geography, cross-border transactions, risk raises, of course. And of course, the usage limits. The cash is generally acceptable. And then the question with new payment methods comes from the POSs, the merchants, the Visa, the everything. If you work, if the company that you choose to work with in terms of payment services has several of these merchants or ways of spending money, it becomes more riskier than a payment service that limits the accepting merchants. It makes a very good due diligence on the merchants and also controls the POSs. But well, these are some of the risks that are associated to these new payments methodologies. And of course, segmentation of services. I was already saying that in terms of service providers and in terms of outsourcing. Well, all of these has to be considered in terms of what is the risk of the payment service. As you know, new payment service methods are based on computer technology, and this is the good part. They provide good prerequisites for active monitoring and reporting procedures. Like Emmanuel was saying, we need, and showing on his previous presentation, we need to connect the systems, but we cannot go to them siloed. So we need to have the information that helps us to make good decisions, to have good controls in place. So going from diligence to the capability to block accounts or transactions when something abnormal or atypical is detected in terms of patterns is a good way of preventing and mitigating the risk that you are exposed to. So monitoring systems can be a very effective tool to do that. And to be effective, such systems must at minimum allow to do this. Discrepancies from, for example, between submitted customer information and the IP address. So it's important to keep the IP addresses. Unusual or suspicious transactions. Cases where the same account is used by multiple users. How can you see that? For example, if you see that this is being used in different IPs that don't make sense, or in different regions if they are using POSs and things like that. Cases where the same user opens multiple accounts. This has to be controlled also. And cases where several products are funded by the same source. So all this is where we should look and have to have the capability to know our operation, to understand our operation in terms of if we are a payment service or a fintech or a microfinance bank. We have to look at this and to take this concern and to put it in place. And for that, we should make the right questions. And what should we look for? So I already told you, discrepancies between the information submitted by the customer and the information detected by monitoring systems. Ask why. Why did you tell me that you are going to use your account for one thing and they are using for another? Individuals that hold unusual volume of new payment methods with the same provider. A large and diverse source of funds, bank transfers, credit cards, cash funding, everything used on the same NPM accounts. Multiple reference banks accounts from banks located in various cities used to fund the same NPM account. So why I'm sending money to this company, to these payment services, if I have, for example, a virtual wallet, and I'm receiving money to fund my wallet from different banks in different regions or even in different countries. This has to be checked. Loading or funding our accounts always has been done by third parties. So people is sending money to me, and it's not myself feeding my wallet, for example. Numerous cash loadings just under the reporting threshold of $10,000, or structured loading of prepaid cards. All these should be possible to manage inside of the system that you put in work and give you alerts on this. We can continue looking for multiple third-party fundings to multiple loading fundings on the same accounts, followed by ATM withdrawals. We can look for multiple withdrawals conducted at different ATMs. New payment methods accounts only used for withdrawals and not for POS for purchases or for online buying, for example, going to Amazon and buy something. And the typical use of the payment product, including unexpected and frequent cross-border access or transactions. All of these it must be reflected in a system where you can build these rules, these controls. If you please can move forward. In the case of prepaid cards brings us a lot of problems because we are when we give a prepaid card, who will use it, it's very possible that it's not the same person that bought this prepaid card. So large number of a bank accounts held by the same prepaid card company, sometimes in different companies. Prepaid card companies located in one country but holding accounts in other countries. Back and forward movement of funds between bank accounts held by different prepaid card companies. Volume and frequency of cash transactions, sometimes structured, conducted by owner of a prepaid card company, do not to make economic sense. So economic cards is prepaid cards it's a threat by their own. You may give a reason, for example, when it's difficult to get US dollars or euros. I'm for example remembering, and I believe that you all know about Angola. Angola a few years ago had a lot of problems in getting dollars, and one of the ways to bring dollars from Angola to Europe or to the United States, it was through these prepaid cards. Okay, and these prepaid cards allow it to a lot of weird transactions, weird movements that move money from Angola, out of Angola to different countries, to different jurisdictions, in a way that it was not easy to understand. So today, this is what I want you to share with you. I'm available at your questions. Emmanuel, Jai, thank you so much.
Thank you, Huri. Thank you very much for that presentation. I found it particularly interesting, especially around the new payment methods and the myriad of different risks that could be manifested and that new rules have to be built for. And I think it also speaks to the whole issue around the fact that it's evolving. Things are going to keep evolving, so you need systems in place that would address those evolving risks and have the necessary mechanisms to integrate with other systems. So thank you for that. Emmanuel, do you want to give a presentation next on, you want to do a demonstration, is that correct? Emmanuel,
yes, it is. So I've just been. Yes, okay, can you hear me? Yeah.
Yes.
So I'll be moving over quickly. Yeah. So I'll be moving over quickly to the demo. Just let me share my screen again. So we'll just quickly give you a brief demonstration of the tool. That's the DCS Lite solution. That is just a quick review of the solution, and then of course you can always ask or invite us for a demo, a more comprehensive demo at your own convenience. So what we'll be looking at, creating entities, accounts, and transactions. Of course, in the solution, we actually will map entities to persons or corporate bodies that can also open accounts and then, of course, carry out transactions. So the application allows us to create entities in various ways. Just hold on. So I'm in the application right now. Of course, DCS Lite is a cloud-based solution. One of the things you're able to do here is you're able to define the different type of entities you want to work with, persons in the company. You're able to create an entity manually. Just let me go back. Sorry about that. I think I have a network failure. Okay, it's back now. Okay. So you're able to actually create an entity, or like I said, a person or a company, and then of course insert all your necessary information and what have you. Of course, you can see I have here some entities already created, a person. We can search, you can do a search based on the entities that are existing in the application. You have an entity here already created, and of course, there is an issue with that entity. What the application does for you is that once an entity is created on the application runs that entity against a particular watch list. A watch list can be an internal list, and it could be an international or global list, like the Dow Jones watch list. And then, of course, it can flag that particular entity for you, depending on the risk rating for that particular entity. So here's an entity already created, and of course, there is a risk based on the risk rating for that particular entity. It has been flagged, and of course, a case has been created with regards to that entity. The application allows you to look at your cases. So when you log into the application, you can look at the cases that already existed. I can search for cases depending on various parameters. In this case, I'm just going to look for a case that is that is currently being analyzed. And then you can see all the various cases that have been captured within the application that have been assigned and what have you. And you can also create manual cases. So in a situation where the application does not generate or raise a case. Now, how does the application raise a case? For instance, when an entity is created, the application automatically runs that particular entity against the internal watch list or the global watch list that the application integrates with. And then flags that entity based on the particular triggers or filters within that. Hello?
No, I was just going to add that.
Hello,
no, I was just going to say that I think it's not just about just the creation. Actually, you can actually import those entities in, so you can speed up the entire cycle.
Yeah,
so just bring up as well.
Yeah. Thank you for that, Jide. So,
sorry. Let me tell you, Njait, sorry. You can integrate, upload, or manually create it. So it's possible to have everything integrated with the systems of the bank. So it's possible to automatically feed the application with transactions or persons coming from the onboarding system and things like that. Sorry.
Thank you very much, Rui. I think that was a very good input. So the application then, does its filtering, triggers your cases, either based on the parameters already set up in the watch list. So a transaction can be triggered, or a particular account that you have created can also be triggered, or based on a diligence deadline that has been set. So that way, your cases are generated in various ways. Of course, if we go deeper into the application, in terms of settings, the application actually allows us to set some risk filters, allows you to set your diligence filter. You can then also you can create your own internal list. So, for instance, if you don't want to just rely on the global or international watch list, you have some internal watch list you have created, maybe based on some parameters within the country. We can actually create our own PEPs for people who might not exist within the global watch list. So you're able to create your own customized screening list as shown here. Of course, other things you're able to do is generate reports. So the application allows us to actually create customized report for you, depending on the local requirements. For instance, NFIU requirement for CTR and STR is quite different from what obtains elsewhere. And there was an online a network breakup or something or whatever, that doesn't allow the application to be able to access the necessary database it needs to access at a particular time. You can do a recovery. You can recover the transaction or do a recovery of the particular entity to then assess them or do an, should I say, run another process on that particular action. I have one here actually waiting for a process to be run on it. Why? Because it hasn't yet been processed. And you can actually then initiate that process again manually. And you can go ahead to set up your own, as well, you can as well go ahead and set up your own reference data, stock markets, basically your stock markets parameters, and what if you, depending on the particular entity, if the entity is being traded on the stock market, because risk ratings are also determined based on whatever stock market the particular entity is actually trading on. For instance, your KYT are associated with your various risk ratings. So for a particular transaction, the transaction can be flagged depending on the risk ratings, and of course that has been established for those, or business rules that have been established for those particular transactions. So you're able to set up different rules for a particular transaction, and those transactions will be flagged. Of course, I think the value of this application is that ability for you to, is the flexibility for you to actually carry out a number of things, both automatically and manually. Another thing that is will find most useful is your user, in terms of user management. Now, you are able to set up roles and functions for different users depending on the requirements. So you're able to set up various permissions for your users. For instance, if you look at, I look at myself here, and you can actually determine what are the permissions that have been set for this part for me, and you can adjust and customize these permissions as needs arises, and you can even go ahead to create others, customize permissions. If I go back a bit, one step. So we have system administrator, you can create administrator, responsible, technician, and functions that have been created within the system. Hello, sorry, the system is just, so basically this, I think the advantage of DCS Lite, in terms, apart from the fact that it's on the cloud, is also the fact that it then allows you, depending on for cost management, depending on the functionalities you actually need, you only have what your organization really needs. So you're not buying a solution that has everything, that has almost everything that you, but you don't necessarily need them. So this particular solution, DCS Lite, actually allows us, based on your specific needs, to integrate with additional capabilities, especially, for instance, if we look at the concerns today around cryptocurrency, and then being able to create a watch list around specifically for cryptocurrency. That's another advantage we actually have with this solution. Though I can't demonstrate that now, but depending on the need of the organization, such watch lists are able to, we're able to actually integrate that with the specific capabilities you might need in your fintech organizations. I think that's about it. I will just stop here to allow us to take questions and
Thank you. Thank you very much.
Can you hear me?
Yes, We can hear you, Manuel. Can you hear me?
All right. Yes.
Okay, so thank you very much for that overview. I think we can, expect people to, if they want some more questions or some more answers onto some of these things, please do get back to us. You can reach us. We've got our email and phone number and everything available for you to reach us. Should you want some more insight into this solution, please do get in touch with us. I think just to kind of round up before we look at the polls. What I think we've been able to kind of describe very briefly, it's the fact that this solution does cover some of those kind of evolving scenarios that we see out there. The fact that, of course, the threats are evolving. We need to be able to integrate with data from different data points. We need to have the machine learning. We didn't actually demonstrate that. We're looking to have another webinar in the next month, where we're going to go a little bit more into the mobile money elements of the solution and actually describe that a bit more. So if you're interested, please do send us a quick email on that. We'll be setting that up very soon. And I think for us today, we think it's been very good that you've joined us on this this webinar. Emmanuel, I think we can look at the poll now, and there's some questions that have been raised. The 4 questions have been raised as well that we need to look at. Maybe we should start with the questions. Okay, let's look at the poll first. Okay, so the first question is, how knowledgeable are you about risk-based assessment for AML and CFT? We have a general view that people are quite within the intermediate level, so there's a room for continuous improvement on that. There's quite a people within the beginners level, so there is a room for it to be upskilled on this solution. So we can assist you as you see the need be. Second one, does your company currently have a money laundering solution? The answer is we have 55% of people saying yes and 45% saying no. Okay. The third one, what is the greatest concern about selecting an AML solution? Can you move down a little bit, Manuel? Oh, let me just move down a bit on that. Okay, sorry. So what is the greatest concern when selecting an AML solution? Security is 20%, integration with other systems is higher. And that really reflects the reality of what we're calling the modern banking or modern financial instruments or payment service providers. There's a need to integrate. So we recognize that, and that's a capability that is really comes out of the box within the DCS Lite solution. And there are some other extensions that DCS can offer on that point. So yes, we have some good feedback from that. Thank you all for responding to that poll. Can we go to the questions then and just have a quick look at what people are asking? So the first one, and this is for Emmanuel and for Hugh as well. Can your solution integrate with multiple PSP applications? That's the first question. Well, there's actually 3 questions. Can your solution integrate with multiple PSP? Does it identify transactions coming from high-risk countries? And does it verify customer identity? Hugh, can I ask you to respond to that? Can your solution integrate with multiple PSP applications?
I think it was for me, right, Jai, the question?
Yes.
Yes. We can integrate with multiple systems, not PSP applications, basically with everything that brings information inside of the application. And for that, DCS has a lot of web services that can be used and allow that integration. As I intervened in the manual demo, this integration can be done in several ways. One of them is real-time integration through the API services or web services, and another thing is by files. That it's not the question here. It identifies transactions. The transactions are verified in multiple ways, not only risk countries, but of course risk countries are one of the considerations that we have. But it can be thresholds of currency, the type of currency, the type of transaction, and all of that. In terms of customer identity, we do not do digital onboarding. Okay, basically, we can check the customer data against lists and to see if it's a PEP or if it's a sanction on it or if it has adverse media and things like that. I don't know what was the question here in terms of verifying customer identity. That it's not.
Yeah, so I think let me just shed some light. I mean, I think it's possibly a scenario where they want to validate a customer before they onboard the customer. Now, I know that you don't have that out of the box in your capability, but you have a set of APIs that can confirm from a third-party solution whether this particular account has been validated.
Yes, it's true. Yes, it's true, Jade. Yes, it's true. Yes.
Yeah, so we have that kind of backend because we don't have an identity management system, but we have the mechanism in place to confirm whether an identity is who it is. So from that point, that can be done. The next question: what are the new strategies for AML in the financial services sector? I think really we talked about this a little bit. We can take that out of this a bit. The strategy really depends on what your financial objectives are as an organization. Yes, if you look at where AML is today, the governance around that is really from FATF, and of course there are regional guidelines that have been set here in Nigeria by GIABA and a few other ones. So that's where your strategy comes from. So, but at the same time, you need to have internal strategies. So in terms of what are the kind of patterns you are defining in your business, and how are you going to effectively group those patterns or identify those patterns in a way that you can build effective rules. With DCS, you can build those rules. Question is, what are you finding within your business, and how do you effectively stop those things in the first place? So it's about more prevention rather than detection. That's where we should be trying to aim for as a strategy going forward. But now we can give you some insights on how that could be done going forward. The third question, how can we acquire this AML CFT app? Please talk to us. We're Dixtior representative in Nigeria. We're very keen to work with you. So please feel free to talk to us and what your plans are. We're very keen to hear from you on that. The last one, how does this adapt as policies? Policy changes? I think that's really a very important question. Now, I think let me let Huey respond to that, because you mentioned the web services. There are other things that are in the solution towards that continuous adaptation of the solution and evolvement. We've talked about evolvement and end-to-end on this webinar. I think, Huey, if you just talk a little bit about your plans on how the solution would evolve and adapt in the future. Huey, are you there?
I believe that we still have a question from Tululope, right? Can we import user details from existing user directory?
Yes. Oh, yes, we can definitely. Can I ask you to answer that last to comment to that last question that I just responded to? How do you?
Alibaba. Yeah, of course, with pleasure. How does this adapt as policy changes? Well, Dixtior has the compromise of assuring that if the legislation where the client is, where a payment service, a bank is, changes, DCS it's obliged, we Dixtior are obliged to adapt DCS to that particular change. Let's imagine that is a new rule that it's issued by the Central Bank of Nigeria. We have to respond and allow DCS to comply with that legislation. In terms of other types of legislation that are not mandatory for the central bank but goes from strategy, the users of the application have the capability to adjust the rules and settings of the platform so that they can fulfill that request. Okay. In terms of what is national, if you want to call it this way, national legislation or international legislation, Dixtior will always be responsible to doing the necessary adaptations and upgrades on the system so that it complies with all the requirements wherever we are working. What may happen, for example, is, but for that is why we have partners like Triversa and you, Jade, is that we in Lisbon didn't notice that a new legislation, specific legislation, arise from Nigeria, and we count with our clients and of course with our partners to tell us, look, there's a new legislation, you have to address this issue, and we will do all the work to put it working and to fulfill that requirements. I think that we lost Jade, no? Yes. Emmanuel, you are on mute, Emmanuel.
Yes, I think we lost Jide for a second there.
I think we lost Jide. Okay, thank you very much, Rui, for that. I think if you can still hear me, I just want to thank all our participants for, being part of this webinar. We know our time is, we're already 2 minutes beyond the time. We want to thank you for being with us. We hope that you actually got some value from this webinar, and we'll be looking forward to hear from you. Of course, our next webinar, as earlier mentioned, will be around mobile mobile money. So we have something around mobile money, and as well as cryptocurrency. Those are aspects we really want to dive in, and actually we'll be doing webinars around, and we'll be looking forward to communicating to you. You should be looking forward to getting communications from us regarding this webinar. We'll be very glad to have you with us. Thank you very much for being here, and we wish you the best of the day.
Thank you so much.
Thank you very much,
Thank
everybody.
you,
And
bye.
thank you all.
G-Day.
Thank you. Bye.